Welcome back. I'm Statistical. You're watching Trade of the Week and joining us for a tech analysis on Sasol, MTN, Discovery and Spur is Unum Capital's Loyiso Mpeta. Thank you so much for your time, Loyiso. So we're looking at a whole range of different things today. So we've got oil and chemicals. We're also going into healthcare, also telecommunications, and then restaurants. So just as we always do, of course, to start off the conversation, let's take a look at how those counters have performed against the broader market. I'm sure it's quite an interesting picture.
Yeah, that it is. And, you know, looking at Spur, for example, I mean, it's not a counter that I normally look at.
Yeah.
And primarily because, so the way I look at markets, I always look at what I call the exterior. Mm-hmm. And the exterior is, I'm looking at price action. When you look at the chart of Spur, it never looks like a pretty picture. It's so choppy. It's not the most attractive picture that you get from a trend perspective. So as someone who, in their screening process, starts by looking at trends and not the traditional fundamentals, I tend to overlook it.
Okay.
But when I was going through my screener this weekend, I was quite surprised by how strong it has performed over the last year and a half or so. So as we normally do, looking at performance from January 2023, using daily data, we can see how strong and consistent Spur has been, up 42% over this time period. The all-share index up 1%, and the other three have actually returned negative. Discovery coming in at -11%, MTN -31%, and Sasol down 36% over this time period. And again, you're looking at these three companies, so much more analyst coverage compared to Spur. But you can see the difference in outperformance.
Yeah.
And what's even more impressive with Spur from a consumer perspective, it's not really a counter that you would call non-discretionary spend. It's actually a discretionary spend, because if you're going out to restaurants under a constrained consumer environment, that's kind of like a luxury.
Exactly.
So once we look at the price or the technicals and a quick recap of the fundamentals in terms of the recent performance, it's really quite interesting how well Spur has done under the radar. Not much in terms of coverage.
And it's actually quite interesting before you go into those regressions. I mean, as we look at that chart, for example, the JSE up just 1%. And it's quite interesting because then you have Sasol being the most underperformer there. And also you're like, well, it kind of makes sense why the JSE hasn't really done that much, because it's filled with commodity stocks.
That it is.
Basically the bulk of the JSE. Yeah. So let's go into those regressions.
Yeah. So from a regression perspective, not much in terms of a surprise. All counters really coming in with very, very low correlation coefficients. We can see a Discovery at 0.5, MTN 0.4, Sasol 0.5. But again, the regressions capture how uncorrelated Spur is to the rest of the market, coming in at 0.06. It's almost like zero, literally. Yeah. Also, when you look at it from a beta coefficient, Discovery and MTN, beta coefficient less than 1, 0.69, 0.86. So you can call them low beta stocks. Sasol, no surprise, being more of a commodity player, coming in at 1.22, which you can refer to it as high volatility or high beta relative to the market. But again, Spur, almost zero. And so from a return perspective, all low correlation, and from a beta perspective, no surprise that Sasol is above 1, whereas the other three are pretty much low beta. But again, the real interesting fact that I'm picking up here is how unrelated to everything else that Spur has.
Yeah.
And again, that is captured in the performance. And also when you look at it from a statistical perspective, it's the same thing here.
All right. Well, we will get into that specific stock just shortly. But of course, let's take a look at the technicals and start off with Discovery there. I think you last did an update last year on Discovery. I don't know if there is a clear direction on what investors want to do with Discovery and the stock, because I mean, it's not a question of whether Discovery is a great company, but the specific stock, because there seem to have been periods where it's had quite a bull market, but then periods where there's been, you know, heavy sell-offs. What are the technicals showing us there in terms of what investors have been doing with the share?
Yeah, so no surprises from the last time we touched on Discovery. And just to recap, I think it was November last year, I emphasized this strong bull run from March 2020, but I emphasized that it looks more like a 3-wave advance and not so much a 5-wave. So I'm a bit tentative in terms of the bigger structure. And then we had this very, very strong sell-off, which bottomed at 173. And then I emphasized that the rally to 160.42 was in a clear 5-wave advance. And what I was forecasting back then was, as a bare minimum, a pullback in 3 waves. And back then, we only had this wave A, and I had forecasted a pullback for wave B, and as a bare minimum, a retracement for wave C. But I did make a bit of a bull case, and that bull case was contingent on 173 Rand or 173 cents holding within this pullback. And what we have seen now is, as forecasted, we had that pullback for wave B, and the stock is now currently selling off for wave C. So I'm looking at this correction as an ABC zigzag, and it's well contained within this descending channel. And we can see that price is now challenging this lower support of the channel. And it will be interesting to see how price action reacts at this support level. You can see that the momentum is still clearly to the downside, but you know, markets can reverse at any point in time. So I'm looking at what does price do at this lower channel here, because if price does break below 173, then it could keep pushing down to say around 90 Rand. So I think what we see in price action here will be very key as to whether this level holds at 100 Rand 73 cents, just to be specific on that price point there. So I'm a bit tentative, but until the outlook is invalidated, I'll still maintain the bullish outlook until it's invalidated. So I'm a bit on the fence when it comes to Discovery at this point in time. And again, you know, the latest, I think it was the 6-month results.
Yes.
Were very good. Double-digit growth, I think, across all 3 of its primary segments. Very strong cash flow generation. But the market seems to have easily dismissed that. So again, you never really know what the market wants when it comes to, Discovery.
I mean, from the few conversations that I've actually had with analysts, is that a lot of them are on the fence because they're kind of waiting for the new growth initiatives to actually start making significant profits, including Discovery Bank, because they've plowed so much money into those initiatives. So investors at this point are like, well, we kind of want to start seeing returns on that front. Yeah. Let's talk about MTN. Going into telecommunications, I'm sure that picture is quite interesting because it's been a very, very volatile stock, of course, also pegged to the performance of the Naira. But a lot of analysts also, you know, still seeing value in the stock, saying that, you know, it's good that at this point it looks like you can get it on the cheap, but of course, seeming that investors have discounted the stock because of the headwinds that MTN has experienced. What are you seeing there?
Yeah, so let's touch base when we last covered MTN. I think it was about August last year. I emphasized this very strong sell-off as a 5-wave decline for wave A. I was a bit tentative as to whether or not this was all of wave B, hence I had the question mark. And I was still forecasting one more sell-off to the downside to complete wave C. So what has transpired since then is we did get that sell-off. So relooking at the entire structure now from this wave A low, there was this period of sideways consolidation, which I have labeled as a triangle. But I still have a question mark over this wave B because it could have terminated at this point. Alternatively, it could be at this point, which will lead to minor adjustments in the wave count, but not too significant. So at current price levels, I'm looking at this sell-off after the triangle as a 5-wave impulse. But for this outlook to be valid, 77.53 has to hold. So the preferred outlook is the 5-wave count is complete and a bottom is likely in at 77.53. But if the price does continue lower and break below 77.53, then the minor adjustment I will do on this triangle outlook is that the triangle actually terminates at this point where I currently have wave 2, and then this will give us wave 1, 2, 3, 4, 5, which is an ending diagonal. So that being said, as much as there's still downside potential, I think at this juncture there's more upside potential than there is downside risk. So even if we do get a further sell-off below 77.53 at this current juncture of the market or of the trend, I'm looking more for upside potential than further downside. And again, you look at the latest results that came out, a bit of a mixed bag really.
Yeah.
From a group perspective, not much strength in terms of growth, but there are pockets in their data services as well as their fintech business, which has done very, very well. And like you say, the devaluation of the naira and all the financing costs around it will always pose a risk for the company. But overall, from a technical perspective, I think there's more upside potential than downside at this current juncture.
Yeah, and quite interesting because it's not to take away even from the performance in Nigeria, because that's still a very lucrative market for MTN, but it's just that currency devaluation that we are seeing really hitting MTN's profits. Let's go into Sasol, the commodity stocks that we are focusing on today on the JSE. A lot of investors have been asking if they should still hold Sasol, or if they sell, at what price should they sell it. But of course, really no doubt that Sasol at this point is quite cheap, quite undervalued. What story is the technical picture telling us?
Yeah, so Sasol, last year we did cover it, I think around November, and I again highlighted this advance from March 2020 as a 5-wave, and I was looking at this pullback as potentially a completed 3 waves. So to look at it more in detail, I looked at this as an A, B, C for a zigzag, but I wasn't convinced by the price action of this sideways consolidation here. But I did say if investors and traders want to be aggressive and start nibbling, I highly recommend a stop loss below 221.36, and it didn't take long for price to actually break below this level here. So what is the current outlook now, the update? So looking at Sasol now, what I'm seeing is this sell-off, I have it as wave A, the pullback for wave B, and I believe that we are now forming a clear 5-wave sell-off to complete wave C. I have here waves 1, wave 2, wave 3, and this current pullback is for wave 4, so I'm forecasting one more sell-off for wave 5. Now there is another possibility where this from this wave 2, wave 3, this pullback here could be for wave 4, and this could be wave 5, meaning a bottom is in at 132.26. But from a right look perspective, it doesn't really sit well with me, because then there's a bit of a lack of proportionality between this wave 2 and this being wave 4. So when you look at it from a wave perspective, this is why it's so important to always ask yourself, what if I'm wrong? Where could I be wrong? And have an alternative wave count. So again, I will say, if you are bullish on Sasol, similar to MTN, if it does sell off again, it would be for wave 5 of wave C. So again, I believe at this current juncture, there's more upside potential than there is downside, because from a trend, Elliott wave trend perspective, this is where we say the sell-off is at a very, very mature stage, but it can still push down one more leg to complete this wave 5. But again, when you're looking at it from a pure risk-reward perspective, there's more upside potential than downside potential at this juncture. And I think also the news around the emissions issues was well received by the market. But again, you can't overlook the fact that their latest 6-month performance was quite dismal. I mean, the oil prices back then were still low. They have recovered now a bit,
and then the
but the chemical prices were also very, very depressed. So it will be interesting to see what the next set of results shows. But like I say, there's still potential for one more sell-off, but there's more upside than downside at this current juncture in terms of the trend.
All right. Well, talking about upside, let's go to Spur. Of course, this is one that you are covering for the first time today, seeming that investors have quite a taste for the stock. How much appetite are you seeing there in that graph?
Yeah, I think, so the one thing I want to emphasize with Spur is the way the Elliott wave principle works really, and its whole premise is it captures investor psychology, it captures investor behavior, it captures the trends. Now, not all stocks have the same or similar textbook type price patterns that the Elliott wave principle has. And one of the main drivers of that is volume and trading activity.
Okay.
And you can see that when you look at the price action of Spur, it's very, very choppy. It's very, very choppy, but when you just put simple things like trend lines, you can see that the trend is clearly to the upside. The stock made an all-time high at 41.78 back in May 2015, had a 5-year bear market which bottomed in August 2020, and since then it has posted a very, very strong recovery. So this is a stock that I would say it's more of a fundamental play than a technical play.
Okay.
But the most ideal buy level would be at the support level here. If price does pull back, it hardly ever pulls back. So if you're going to wait for a pullback, you might never get it. But if from a valuation perspective, you feel that there's still more upside, there's no evidence that this all-time high won't be breached and the stock can potentially make a new all-time high within the next, say, 12 to 24 months. So again, very positive latest results. I think also the trading update, the operations are doing very well, very robust with the loyalty structure that they have. So very, very consistent businesses. And also now with the acquisition of the majority stake in the Doppio stable as well, that's going to kick in very soon. So I think, I think the stock or the company itself looks very, very robust. I can't see much in terms of what can go wrong from a fundamental perspective. I think also the update was very, very positive in terms of the outlook as well. So from a fundamental perspective, very, very solid. Technically, as an uptrend as you'll get, and so I'm quite bullish on Spur.
Yeah, and I mean, sometimes you actually don't get that when the fundamentals of the company actually, you can see that appetite on the stock as well, and you can see that filtering through to the actual share price.
Yeah.
Thank you so much for chewing on that with us, Loyiso. Appreciate it. That was Unum Capital's Loyiso Mpeta.